Well, the Dow's moved down 1,300 points in the last couple of days. We've done a few videos on the effect of Trump tariffs on the market, the stock market crash, and today I want to give you a game plan and a really quick lesson on how to deal with the volatility in the market. And if you can understand some very basic things about how to read stock charts, which I'm going to show you in 2 minutes, then you will understand how to predict where this market is going to go and maybe give you some comfort and able to look for opportunities in the market, which crashes generally create. So let's begin with a very quick lesson on how trends move and how you can predict when trends change, because that'll be important to take advantage of the weakness that's happening in the market and also give you some comfort as we go through that. So I'm going to draw a little picture here. Typically, a trend goes like this. You'll have a downward sloping trend and it has a series of falling tops, and the trend is typically broken when the trend line is broken from a rising bottom. And that's when you start to make an upward move, and it continues that sort of way as long as the upward trend line is intact before you break down from a falling top and then move lower. Now sometimes trends will be sort of sideways and then they'll break out, and that of course is an opportunity to buy, or you wait for the pullback and buy the break of the pullback. So with that in mind, let's now go to Stockscores.com, my website, and take a look at the chart of the S&P 500 and just map that out. So we can see that on the daily interval, the market was trending higher and it just made a series of rising bottoms, and then it broke that cycle right there. And it, instead of building falling tops, it's been making what we call a triple top, where it's been hitting resistance and then it broke down right here, which is why we've had some weakness. Now, with that said, it's not that critical yet because we're still holding this support and we have not broken down from a falling top. And until we break down from a falling top on the daily interval, I'm not too worried. But not everyone is that longer term time frame where they're looking at the daily interval. So what we can do is also look at the 1 month, 30-minute interval. And now you see how the weakness of the last 2 weeks, let's say, making some sense, because we had bottoms rising, we made a falling top, we broke down from a falling top, and we've since then been in this cycle of falling tops, which means the sellers are in control. So what has to happen for this weakness to end and for there to be a buying opportunity in stocks is to break this downward trend line from a rising bottom. And so all you have to do is go to my website or any website where you can get charts and look at a 30-day, 30-minute chart and look for the build of a rising bottom and then a break of the downward trend line. Until that happens, you should be in defensive mode because the market itself is taking most stocks lower. Now, I always like to say that stock trading and the stock market in general is sort of like boats on a lake. You have sailboats and you have motorboats. Most stocks are sailboats, which means the direction of the market, which we'll call the wind, is moving stocks around with the general direction of the market. So if the market's moving down, most stocks move down. If the market's moving up, most stocks move up because, again, most stocks are sailboats. The motorboats on the lake are what we call alpha stocks. They are moving on their own story. They are able to go up even when the market is going down, either because they're in a sector of the market that is inversely correlated. For example, gold right now is more inversely correlated to the market than most sectors. And so those inversely correlated sectors can move up. They can be in those cycles of rising bottoms while the overall market is going down. So if you want to own stocks, you have to be in stocks that have that optimistic cycle. And we can pull up just a few stocks randomly. Let's try NVIDIA, and we'll go to the 1 month chart and look at the 30-minute interval. So my always question that I ask is, who's in control, buyers or sellers? Well, the buyers were in control here in this part of the trend, and now the sellers are in control. So you want to, if you're a short-term trader anyway on this time frame, stay clear of NVIDIA until it can break the downward trend line from a rising bottom. But let's take a look at a gold stock. Let's take a look at GLD, which is the gold ETF. And if we go 1 month, 60-minute chart, you can see that we were in the buyer control, We broke from a high, not from a falling top. Then we made a falling top and broke down, and that was that little trend. And now gold has broken to the upside and will probably move up to here before it gets stuck. It's the same principles that I repeat over and over again. If you can understand that drawing that I made at the top of the video, where we're looking at rising bottoms, falling tops, and that cycle of breaking trend lines, breaking a downtrend from a rising bottom, or breaking an uptrend from a falling top, then you can predict where the market's going to go. Now, one last thing I want to talk about, and that is the long-term picture is still not that bad. You know, we've had some volatility in the short term, but if we go back to the, let's go back to the NASDAQ instead. QQQ is the symbol for NASDAQ. And if we make this a 3-year weekly chart, you see that we are still in a cycle of rising bottoms. So if you are a long-term investor, it's still okay to be a long-term investor. Now, it is a bit of a concern because we've made this double top. And if I draw a trend line across these lows, you can see that we're really flirting with that. And so if we were to bounce, build a falling top, and then break the upward trend line from a falling top, that could lead to more weakness. And that's when you want to get really careful if you are a long-term investor in the stock market. You want to protect your portfolio. You want to jump out when you see that long-term weekly upward trend line broken from a falling top. Now, it's happened a few times, and let's just look at a 5-year chart so I can show you what to look for. So this is the 5-year chart, and here's when interest rates started to rise. So there was our upward trend line. We had this little falling top. We broke the upward trend line. That was the point to exit. And you stayed out of that weak market through all of 2022. And then the downward trend line was broken from a rising bottom early in 2023. So you're out of the market here and you're back in the market there for this. Well, now we're watching for the potential of this upward trend line being broken from a falling top. Hasn't happened yet. And so we still have good stock scores. Sentiment stock score above 60 is always good. That's the thing that we're looking for, is looking for that break of the trend. Now, while we're at Stockscores, just want to let you know that I have a free weekly email that goes out. You just click on this See More link at the homepage, and you can register for that. And each week I will send you my email newsletter with some stock picks, some trading lessons on how to analyze the market, invest in the stock market. It's all free. So I hope you can be able to do that. Also, make sure you're subscribed to this channel. I've done a number of videos over the last few weeks that sort of warned about the weakness that was coming, and we're seeing it coming through now. But I think that the next move is probably more a positive one, as the market is getting oversold and due for a little short-term bounce anyway. We'll see if it lasts. Hope you've enjoyed this video. Please click on the like button if you have. And as always, trade well.